This is Tom Cloud with this week's Precious Metals Market Update. This is a big week for two reasons. Janet Yellen, the head of the Federal Reserve, even after last week not raising rates, she still has to meet before Congress for the semi-annual end of the second quarter meeting before Congress, and she also has another meeting. So people will be watching closely to see if she hints of anything coming, a rate hike or another QE. Some people think it's possible. I think it's going to be very neutral after last week. We look at that and see that, you know, what's amazing, since the 2008 financial crisis, the Fed has either said they would or would look very closely at raising rates. Since 2008, 8 years, there's only been one rate hike in 1 month. That 1/2 of 1%, or 1/4 of 1%, going back to December of 2015. That's it. All the rest of it has just been talk to try to keep people from fleeing the stock and bond markets. And it's going to really pick up as things go forward, especially into the fall, which is always a good time for gold and silver. The second is the Brexit exit, Britain exiting the European Union that votes on Thursday of this week. And over the weekend, the people wanting to leave went down, and the people wanting to stay went up, as all the international bankers, the people that finance a lot of this propaganda, want Europe. So we saw the law, we saw the unions come out and wanting to stay. We saw Cameron, the prime minister, wanting to stay, saying it would hurt Britain to leave. So all this came out, and over the weekend we've seen it go back to where it looks like, if you believe the figures, Europe will now vote to stay. And gold on Monday, as I record this, is backed up $15 from where it was on Friday, when the polls looked like they would exit the European Union. So we'll follow it closely, but by the time I visit with you next week, the vote will have already been made. And if you're betting either way today, you got to bet Europe's going to stay. But that doesn't mean, but if they do exit, then you're going to see a jump to gold of $70, $80 to $100 an ounce immediately on that. So we're going to continue to watch those two very important things this week, but like I said, I don't think you'll see Yellen talking anything about raising rates. She didn't last week, and it'll just be kind of a yawner, if you will, not anything going on. But I got a report from one of the people I really respect, and the same thing we've talked about, I just want to touch on them. We're looking at negative interest rates continuing around the world, which is great for gold. Citizens are not willing to give their money and pay, like in Japan and Germany, 1/2 of 1% to 1%, just to keep your money in the bank, when the risk of being in banks with bail-ins are at an all-time high, and yet people are still willing to give their money. And while I don't see negative interest rates coming to the U.S. In the near month or 2 or 3, it's certainly something that's going to continue to drive our country's debts. We've got to continue to address it with debt going up $1 trillion a year. We're up over 19 trillion, 250 billion, and it's just no relief in sight. Obama has over doubled the debt in 7.5 years that took from George Washington through George W. Bush to acquire. And then we're going to look at the U.S. entitlement expenditures are increasing at the highest rate of all time right now, as more and more immigrants are being paid for coming here, which makes no sense, except that's the way it is. We look at jobs last month with only 38,000 created when they were expecting 155,000, which shows a possibility, if not a probability, of another quantitative easing round. And then remember, you've got the first quarter GDP, the gross domestic product was dropped 0.8%, putting more pressure to have quantitative easing. So all these factors, as we have a quiet summer, are still out there, and I can promise you by the fall, they're going to be major news, and we continue to have wholesalers telling us it's going to be hard to find product this fall just based off of the large deals that are being shopped primarily in Europe, but also in the United States, where we're seeing people asking quotes on $30, $40, $50 million of gold and silver, which are big orders in the gold and silver industry. So we'll just keep an eye on it, and we'll revisit this next week after Yellen visits Congress and after the Brexit exit or stay has happened. So until next week, this is Tom Cloud signing out.